The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks, good afternoon, and welcome to the show. Before I get started, I have to tell you about what happened to me this weekend. You talk about your past following you around. It's really amazing about the 6 degrees of separation, about how close we are connected. Here in Tucson, we have our neighbor who's our closest friend. He's 91 years old, and he's just about as nice as guy as you could possibly ever want to meet. And what's really neat about it is the fact that he is still very, very active, and he has a bucket list of things that he wants to get to do, and he wanted to go to California to visit his buddy that he went to high school with. And so he asked me if I would take him to Palm Springs. So Friday we took off. We went over there. He gave me the address, and I put it in the GPS, and I recognized it immediately as the Thunderbird Country Club. And I said, boy, I said, I can tell you one thing. I said, your friend is loaded with bucks. And he said, yeah, how do you know that? I said, that's the Thunderbird Country Club. And he said, do you know that? And I said, well, of course I know that. I said, I know Palm Springs relatively well. We drove across the desert, didn't talk very much about his friend or anything, but what we did was we went and we looked at the the weather and everything, just talked about the usual stuff. We get to the house, and I get out of the house, and I hear someone say, Larry Pesavento. And believe it or not, the guys, my neighbor's Kelly, his buddy, who was 91, was one of my customers at Drexel Burnham. One of my big customers. He was one of my best customers. He worked for the law firm of Gibson, Dunn and Crutcher. That was the largest law firm in Los Angeles. They used to be in the Crocker building. That is not the Crocker building anymore, but it is really a big place. They have lots of different divisions, but he was in the entertainment division. He only had about a half a dozen clients. He had Richard Boone, and he had Lee Van Cleef, the famous cowboys. He also had Lee Marvin. But his number one cowboy that he had for a customer was a man named Ronald Reagan. That's before Reagan was governor, and this was in the early 70s. And he was governor around that time, I think 76 or whatever it was. But I was at Drexel at that time. And anyway, we went into the house, and of course, we were Dodger fans and all this stuff, but it was really exciting. He said, I got to show you something. He walked out and went into one of the other rooms, a spectacular place. It was really something to see it. And he came out, and he was carrying this little strong box, and he opened it up, and he pulled out a receipt for 100 Cougarans that I had sold him in 1977. He still had the Cougarans, and he still had the receipt. And, I mean, you talk about walking down memory lane. I really couldn't. I was just really shocked. And I said, I'd really like to have one of these Cougarans as a memento of seeing you after all these years. And he said, Larry, he said, I'm going to have one photocopied and sent to you. So what a nice guy he was. But anyway, we had a wonderful time talking about this. He was just a really nice guy. And it just really, really fun to go through all that. Anyway, let's talk about the market. Folks, we are living on very, 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 very borrowed time. If you take a look at Barron's this week, the lead article in Barron's is there's smooth sailing ahead in stocks. And they show the picture of the bull and the bear. The last time they showed the picture of the bull and the bear was in March of 2000, when they showed the bull pushing the bear out of the boat with the bear weighted down with weights. And they're giving the same type of indication here where we are now. We are making, I've just posted into the Tiger TV, we're making a 27-year low in the number of bears that we have in the market. I think they're 13%. We've only seen this level 3 times in history. We've got margin debt at a level that we've never seen before. I don't know. My timing sucks. All I know is that I am flat out right. You can try to convince me that I'm wrong, but this is it, baby. We are living on borrowed time. I don't know when it's going to be. It might be today. It might be next week. It might be next month. But once it happens, it's going to be the worst thing that's happened. It's going to make 2008 look like a rally. That's what it's going to look like. This is going to be something bad. Now, I know I get some of these right once in a while, but if you remember in 2009, in March, I said this was going to be the biggest rally the stock market had had in history. I said, well, did I say 58 years? Yes, something like that. But it was over the last 5 decades, whatever it was, I knew it was going to be a monster rally, which, rallied 7 years. Didn't think it was going to do that. But this is really big, that what we've got going here. It really is. I'm going to show you some charts here. Whether you want to look at them or not, that's up to you. But they're very important charts from a technical standpoint. Now, if you look at where we are with the bulls and the bears, I wanted to show you the. If you give me 1 second here, if I can find it. The trouble is when you get to be old, your eyes aren't as good as you'd like to see. Oh, Larry, where is it? Ah, shucks. Come on, bear with me just a second. I'm going to give it another 30 seconds, and then we'll see if we can. There it is. I found it. Doesn't take me very long once I get moving. I'm just rather slow. I tell you, I called my kids and told them that I had seen Steve. He used to sit at Dodger Stadium in the box seats behind the Dodger dugout, because we were friends of a couple of the Dodgers, and we always got great seats, and he had season tickets. And he said he gave this up about 10 years ago, and he doesn't really follow it anymore, but it was really exciting. If you'll notice the RIDEX indicator for money market assets, you can see that the money market assets is getting very, very low. I mean, they don't have a lot of cash to buy at this point. So we're going back here looking at levels we have not seen since 2000, when the top was made. So there's just so many things happening here. You just got to be real careful. That's the main thing. I'll tell you, if you really wanted to really benefit from this, and I don't get a dime for this, folks. I mean, nothing, but I want to promote Basil Chapman's 8-hour class that he's giving. When you get to talk to that man for 8 hours for a small amount of money, you really ought to take advantage of it. And with your Tiger dollars, it's a flat-out no-brainer as far as I can see. I've watched Basil for 7 years. He keeps you long during the bull markets, and he keeps you short during the bear markets. That's what you really look for. So he does a great job, and it's something that I think is, really, really important that you really do that. If you really need help in your trading and stuff, I think, well, maybe I should take the class. I'm just sort of joking. I actually don't stay short all the time, just some of the time. I just wanted to bring this other chart up that shows the relationship of what really happened with QE2 in stocks. If you'll get a chance to take a look at this one, this comes from Ed Yardini. He's been around for a very, very long time. I happen to know the guy. He's very, very smart. And he's basically showing, the global growth barometer and what's happened to stocks versus what's happened to actual growth. So that's another thing that we have going. That's why this one that's happening now, this is just like, if you remember our leader, Tom O'Brien, back 2 years ago when the yen was at 75 and the whole world did not want that yen. And he was talking about King Dollar at that time, and that thing moved $23,000 in less than a year. This is the type of move that you're going to be seeing in stocks. They're really going to hurt some people, folks, on this one. It really is. The complacency is such that it's just not a matter of if, it's a matter of when. And I don't know exactly when it's going to be. There's about a 10% chance probability that I might get knocked off the air here. Now, I can hear the sound of one hand clapping right now. We have a huge storm going on here in the middle of the monsoon season here in Tucson this morning. So there's thunder and lightning everywhere, and we'll see if we can make it through the show or not. But it's very loud outside. And we'll see where the thing happens to end up here. So, okay, now those are just a few of the things that I'm watching as far as the overall market. I wanted to show one that we showed just recently, about 2 weeks ago. I haven't had a chance to update it, but it was hit on the internet quite a bit. this weekend, and I think it's worthy of us taking a look at it too. It shows the relationship the relationship of debt versus where we are with stocks and stuff and the market, and it shows again how hyperextended we are to the upside, and that's just completing this big pattern. Now, the first chart that I posted into Tiger TV today was the New York Stock Exchange Index, and we have still not taken out the high. We took it out by 3 points is all we did. From July 3rd, we took that high out by 3 points. So far, that is indicative of a potential double top, so we have to keep an eye on that. The IWM is still making a 61% retracement. There's a few things, made a 1.27 in the S&P move, and we made probably a 1.8 or a 1.9 move in the NASDAQ, which has been far, the most bullish of those things. Folks, I wish you could hear how hard it is raining here in Tucson. It's banging against the skylight in my office like drums from a Hawaiian hula dancer. Wow, it is really loud out there. Okay, that's about it on the stocks that I wanted to cover right off the bat. I'm going to double check one other thing to make sure we're looking at I know what I wanted to do. I wanted to show the fact that where we are with the potential double top in the Dow Jones also, but whether that's still, we still haven't made a double top yet. Well, excuse me, we have made a double top, but we haven't broke out. We were actually Friday, we were down about 100 points, and in the last two hours, the market just turned around and, rallied really strongly to close right near the high on a Friday, which is not unusual. So we've made a double top from the July 3rd high, and we have a Bradley date is today. So I don't know if it's going to make the market do anything crazy or not, but we'll wait and see. We also have something else that's happening, and that is we have the most important full moon of the Chinese calendar that started about a little over 5,000 years ago. This is known as the Mid-Autumn Festival. It's a big holiday in China for 2 days. And basically, the Chinese people give out little things called moon cakes. They look like the moon. They're a little like angel food cake and shaped like a moon. And they pass these to your friends and to strangers and stuff, much like you would if you were giving M&Ms, or something like that. I don't know if you've folks heard that lightning and thunder that just hit, but boy, it was really loud. I don't know if it goes through on this microphone or not, but boy, it is really raining out there. Holy cow. It's raining cats and dogs. We need it to rain bears. I'd like to have some bears get in here. They're becoming endangered species like the Siberian tigers. So anyway, we're really close. That's all I can tell you. When you start seeing these things in Barrens, you're in trouble.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, last Thursday when we were on the commodity show, we talked about the importance, like it was a week ago, the importance of that 98 level in the XAU, the gold and silver index. And as you can see, once we went below the 98 level, we've dropped at least 6% below that just very, very quickly. And that's, telling you that you want to go, a great deal lower. We've been, bearish gold for the past few weeks, and it's getting more and more bearish by the day. We're down about $14 today. And so it's going to be interesting to see if it's going to be able to hold that 1240 level, but frankly, I don't think it's got a chance to even hold that at all. That's the way it looks from my point of view, from a technical standpoint on the gold. There's one that's even more clear. How can that be more clear? One that is clearer than the gold, and that is the silver chart that we've been talking about for quite a few weeks here now, that it looks like we are heading down to the $17.40 per ounce level in silver, which is the 786 retracement from the low from 2008. Remember, it went from $9 to $50 an ounce, almost 50, and then we're coming down now to the 786 level. I think I've lost. I don't know if you can hear me or not, but everything else, all the electricity's out here. Can anybody hear me? I didn't think so. Well, I don't know. My generators are on, that's why, but everything else, sorry, folks, but all the electricity's out in the house, all the computers and stuff, so I'm on my generator here, so, boy, it is really raining. I wonder how my ark is doing out there, if it's off the floating yet. Boy, is it. We haven't had a rain like this all season. Okay, well, I still got the generator on. At least I got 2 hours here, so we'll see. Anyway, you can see the silver. It's got a price objective of $17.60, and we'll see if it finally gets to that. I don't want to get in a boat, but we'll have to wait and see if that happens. We'll wait and see. Someone asked me a question if I was ever able to meet Ronald Reagan, and yes, I met him when he was governor through Steve, of course. And we were at a cocktail party before he even decided to be president, and the kids were there, and they were really impressed. He was a real gentleman, folks. I think I've told this story before. I was in China when Reagan died. I believe it was springtime, I believe, when he passed away. I think it was 99. I'm not sure. Had to be close to that, 99 or 2000, in that ballpark. And when in China, when he was a very good friend of China, he and Nixon both, but he was a very good friend of China, and the China had all of the people put on the Embassy Row, which is a beautiful place in Beijing, put all their flags at half mast, and except for France. France would not lower the flags to half mast with Reagan. So China didn't do anything except they turned off the water and electricity. A few days later, the flags came to half mast. We got a call from, I'll stop talking here, from Greeley, Colorado. Bobby, are you there?
Yeah, Larry, I was just calling in to tell me that you're coming through even though you're in a rainstorm.
Boy, it's in a rainstorm. Oh, yeah, it's just loud. I mean, you just can't. I have a skylight here in my office, and it's we get rain, but never like this. We must have had a little bit of a hail, but boy, it's really loud here. Yeah, very loud.
I hear you. I mean, I have a friend of mine who lives in South Phoenix, and they got swamped like 4 weeks ago. They're still cleaning up from it. I got a question on SCCO, Southern Copper, which the old symbol used to be PCU. I used to play it like a fiddle, but FCX is in a downtrend, and why is SCCO up? You think because of the band?
Two different. I don't know. They're just two different stocks. FX is Freeport-McMoRan, isn't it?
Right.
Yeah, that's a much bigger one than the SCCO. That might be something to do with it because it's a much smaller stock. But again, you'd have to ask someone that knows something about those stocks. Bobby, I don't know diddly squat about it, and I don't profess to, but the volume on FXCM is many times larger than the Southern Copper, so I would not worry too much about that. But there's variousness across all the commodities, my friend. That much I know for sure.
Oh, yeah. All right,
okay, thanks for calling in, my friend. I appreciate it.
Thank you.
You bet.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're going to switch gears here, and now we're going to take a look at the U.S. dollar. We'll start out with the euro. And as you can see, we have broken down very badly in the euro. We're heading towards that 128 level, which is a 61% retracement on the weekly basis. Boy, if it doesn't hold 128, folks, we're going to be going down below 118 to 118 to 110 easily. That'd be another $10,000 to $12,000 lower in the market. We've had the British pound under a great deal of pressure today. It's coming very close to the 786 retracement down at the area of 160. We're trading at 161.50 right now. So it's going to be, very, very interesting in both of these. The dollar is very, very strong. It comes out of there very, very quickly. I happened to listen to a TV broadcast from one of the people that, financial reporters, and he had on his guest a man named Jim Rickards, Rickards. He wrote a book called The Death of Money. He had been with the CIA, the Central Intelligence Agency, that some people refer to it as can't interpret anything, but he was a deputy director there in charge of the Project Prophecy, which was talk about cyber terrorism, how they shut down our bank accounts and stuff and things like that. And he had a very interesting commentary, and he said that the most infamous thing that we have in terrorism for cyber terrorism is the Federal Reserve System. And so I said, wow, I said to myself, you mean there's actually somebody else besides me that's out there that actually thinks that way? And so I listened to what he had to say, and he said that there were going to be several flashpoints that would occur before any type of a crash would happen. And he said three things. One would be a collapse in China, either the Chinese real estate or the Chinese stock market. He said a collapse in the U.S. dollar where they switch petrodollars. They switch taking the U.S. dollar per petrol. And the third thing was the collapse of the Treasury bond, Treasury note market. Well, none of those things has even come to have happened. In fact, the bonds are breaking a little bit, but that's nothing. But the dollar is going the exact opposite, and the Chinese market is just setting up there at the 61% retracement. So nothing is really happening with what he said were going to be flashpoints. But the fact that was interesting is that I finally found someone after 2 years that actually thinks that what the Federal Reserve is doing is not helping us very much. I still believe that, and I'm probably wrong, which I am wrong, but we'll see. We'll do one thing at a time here. But if I'm right, remember, the paranoid person only has to be right one time to prove that he's not paranoid. So remember that. That's very, very important. Okay, we're going to switch strategies here now. We're going to take a look at one other thing that I wanted to mention, and that is the give me 1 second. I want to look at the oil market because we are breaking major support today. I did this late last night, and today we're down over $1 a barrel in oil, which takes out the support that I was looking to come through at around the 92.30 level. In fact, all these things are breaking down. Oil and all this stuff is breaking down. Someone just posted the fact that the CME is raising the margins on oil, and the reason why they do that is because if the market does come unglued, that you got to be able to protect yourself. And believe me, see, if you don't remember, you might not remember this, but in 1999, when we had, was it 99? No, it was 1990. Oh God, I can't lose. Yeah, it was 1990. 91. 91 is when we had the Desert Storm War, and oil dropped $11 a barrel in one day. It went from 42 to 31, on its way to $10 a barrel. And some of the bobbing heads at the Merc are remembering that, and so they want to be able to have the accounts protected. But first they protect themselves, and then they protect the clearing members, and then they will actually see if that's it. So we'll have to wait and see. Someone said that they decreases the margin on the Brent oil. That's hard to believe. Wow, that's the exact opposite of what I would have expected. The prices are lower, which would make the margins lower, but the volatility is greater, so that's strange that they lower the margins. Well, learn something every day. Maybe the bobbing heads are not the heads that I think that are there. So we'll wait and see. But crude could easily drop $10, $15 a barrel in one day, folks. It did it before, and that was right at the Desert Storm War that January. I remember because I happened to be short oil at that time, and was very fortunate that it did that in one day. That was the day we had gold was down about $40, and the stock market left a gap that's still not filled from way back in January of 1991. It will be filled sometime, but probably not in my lifetime. We'll have to wait and see. But gold is breaking, oil is breaking, silver is breaking, soybeans, corn, wheat are all breaking. We got deflation across some of these commodities, so wondering where the business is going to come from for some of this stuff. But we'll have to wait and see. I know we got huge crops out there in the grains, but the other stuff is not acting the way you think it would. But that, in fact, this is how markets work. You got to look at each one separately, and that's the bottom line of what we want to be watching. So I want to post the chart of the Treasury note market because I want to make a comment about this because the figures on the Treasury note market are absolutely amazing to me. Folks, listen to what I have to I wrote this down so I make sure I get it right. 2 years ago, Irish government paper was selling for 23% interest rate. 2 years ago, it was selling at 23% interest rate. Do you know what that paper is selling for today? Less than 1%. In other words, people do not think that Ireland is going to have any chance of defaulting. In 2 years, they turned everything around. Now, there's the problem with this whole thing that we've got going now is related to debt. Has very little to do with the stock market. You know, one wags the tail, the other one's barks, but it really is more about debt than it is the stock market. So you really need to watch these bonds, because if you come in someday and you see these treasury bonds down 3 or 4 points 2 days in a row, look out, because then you're going to be looking at one of the things that could be one of these flash points that Jim Rickards talks about. I don't know. But he showed some wonderful charts about, you know, why the Federal Reserve is screwing up. And remember, this quantitative easing is a experiment. And the question that I have is, you know, if this is so great, why didn't they do this since 1913? Why did they wait till 2009, 2010? They could have done it any time through these areas. They could have did it in 99 or 2003 or right after 9/11. You know, we don't know. So we'll wait and see. We've got a full moon, I believe, is tomorrow, and that's the Mid-Autumn Festival in Chinese. So that's very interesting to see what will be happening here. Whether that'll be a top in today or tomorrow was a top in the market, I don't know. We didn't make a new high in the NYSE as of yet, but it's still early in the day. We could easily, you know, really easily do it. So we'll wait and see. And then we have, of course, Apple has their dog and pony show. And then, of course, we have the Alibaba IPO coming out. 8 years ago when I was in Hong Kong and Sarah and I first got married, she was trading Alibaba because it had such big swings and it would go up and down. Wow, it was just unbelievable how it would hit the fib numbers up and down. And now it's coming out as an IPO. And it's, I guess it's going to be a come to Jesus moment in the market, just like we had with Google and Tesla and you know, some of the others. So we'll see if it'll be if straight up again. We'll have to wait and see. But I still believe that what we have going on right now is more of a debt market bubble than anything else. You just can't borrow money like this at no rate. It just doesn't make any sense. This is the exact opposite of what was happening in 1980 when Volcker took over as the chairman of the Federal Reserve Board. We had T-bill rates were 13%, and now T-bill rates are under 1%. But do you realize that Irish and Spanish debt is far more expensive than our paper here on the United States of America Treasury bonds and Treasury notes? The yield on the Treasuries for Ireland and Spain are less than they are for the U.S. So people are willing to pay a premium for those countries and not for the U.S. Another thing is we've got London, or the UK, the Euro, the ECB. The 10-year notes are selling for 0.8%, 8.85% for a 10-year note in the UK. Here, I think it's 2.4%. You see the difference in the spread? So something's not right here, folks. The boys are not they're not playing with a full deck here. All the dogs are not barking. You know, so something's going to happen, and I don't know what it's going to be, but something is going to make this thing really crack. Boy, when you got this many bulls are in the market, and with margin debt the way it is, and all of these stocks making these huge patterns, boy, this is going to be a really interesting to see if this is going to be a you know, whether it's going to make it or not. But I think where the gold is heading to at least 212. That's only $40 away from where it is right now. And if we break the 212 in gold, 1212 in gold, we're heading to 1170. And if we break 1170, we're going to be looking at 950 in gold. That could really be you know, we'll be able to sink. Someone asked a question, maybe the stock market and the bond market have nothing to do with the economy. That's probably true, but this is how the people view what is happening with the economy. Folks, when things are going up like this, nobody really cares. They don't want to listen to anybody like me yelling at and screaming at him and warning him. I went through this in 2000. 4 or 5 months. Well, it's been more than that now, but let's see, May, June, July, August, September, about 5 months. I did the same thing in 2000. And it's just a matter of time. This one is going to be the big one, folks. This is my last dance to see something like this. I'll never see anything like this in my lifetime again, because I'm in I'm in the seventh furlong of an 8 furlong race. So there's just not much, not much to have happen. So this is going to be a big one. So we'll see this. Oh, the young people will probably see it again. People that are in their 20s and 30s will probably see it again. But the folks that are in the old baby boomer types, they're not going to see it. It's going to be very, very interesting right here. That man, Mr. Rickards, that Jim Rickards from the ex-CIA guy, he was a very eloquent speaker. I was very impressed with the way he spoke. He seemed his knowledge level was very high. His charts were very easy to understand and stuff. So, take a look at his book. It's called The Death of Money. And just to keep in mind, because I think we have something really sinister getting ready to happen here, worse than what we had in 2008. I don't believe it's going to be any question that it's going to be worse than 2008 for 2 reasons. A, nobody's expecting it, and B, we're at a much higher level. And that's the main thing where I think we're going to see something, really, really dramatic. Okay, so we'll see if that's the case. We have a question from someone about Apple. We have this meeting tomorrow on Apple. And, folks, those people that follow Apple, it's a cult. They really are. They stick together. But everybody pretty much is, I guess, expecting something really big to come out of Apple. I know maybe Steve Jobs is going to come back again. We had one other guy do that a few thousand years ago, so maybe Jobs is going to come back. I think that would give the stock a rally if Jobs came back. I know I'd probably buy it, so we'll have to wait and see. We got a call from our friend in Tampa. Scott, are you there?
Hey, Larry, how you doing?
Good. Listen, we're almost ready for the break, but stay with me till after the break. What's on your mind today, buddy?
I wanted to comment on Rickard's book. I read it about 3 times, and I think there's some important things about that people should probably think about.
Fine. Go ahead. What's the first one? I really enjoyed listening to the man. He was a very learned fellow, and the fact that he worked for the CIA and was a deputy director there means a great deal, because you don't get a job like that, if you're a dummy. So he certainly knows something.
Let me tell you a little bit about him. I mean, he's not a spring chicken either, but he's a trained lawyer, and also he was trained in Europe in economics. I forget, in London, I believe, but I'm not sure. So he knows the kind of people that work the IMF. He's very familiar with them, and he talks about that. And he's a special consultant as well, and he was consulted before there was the crash in 2008 and 7, and a special Pentagon type of thing, and he brings in his people as a consultant with the Pentagon. They say how can there be a war, and he predicted it would be through currencies. It would be a currency crisis. And so we got to
take our break here. Stay with us and come back. I don't want you to leave. All right?
Yes, sure.
Okay, thanks a lot, Scott. We got to take a break here, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, folks, we're back, and we're with our friend Scott from Tampa. Scott, we were talking about Jim Rickards, the author of the book Death of Money, you were saying?
Yeah, there's some other things with him. When there was the crash in the market, he was asked to research. He got one of his friends who, I don't know the guy's name, you would, but he was very young, a genius, made hundreds of millions of dollars in options, and actually almost went to jail. He went to jail, or he almost went to jail. And Jim Rickards brought him in to analyze for the CIA if there was a way to look at markets to see that there was a terrorist event happening. And they actually developed quite an interesting software, and the CIA canned it because, and they'll probably use it eventually, but they found a way to track people, and he has a long history of this type of thing. But let me just cut through just a couple things. The book is a must-read. There is an alternative currency that he thinks could occur. It already exists. The SDR, special drawing rights, everything about it, including the name of it, supposed to be confusing, and everything's confusing, and it's designed to be that way. Nations know about it. The only reason why he's not sure that will be the alternative currency is because not all nations agree on it. Not everyone has the same agenda. But he says the dollar crashing, losing the reserve status, is a 100% certainty. It's just a question, not if, but when. And if he were asked, he would say between 2 and 4 years, and it could be any time. You don't know because you don't know the trigger events. And he says when there is a currency crisis, it is one and the same thing. If there's a currency crisis, there will be a banking crisis. One does not occur without the other. And so he has some recommendations. It's not an easy book to listen to. It's not terribly technical, but it is to me. And it took a few times to understand exactly what he was saying. He has interesting recommendations because he would suggest maybe some gold, but not to the extent that you would think. He talks about how you want to be in some cash. Maybe you have 10, I think he said 10 or 20% gold, but he's not a gold bug. He's just a technical guy who has a profound understanding of markets and is consulted by all kinds of people and writes books that are really quite good books. And he's a very educated guy. Highly recommended, and it'll give you some insight about, it's not about trading, but it's about understanding the risk and the changes that are coming.
Well, I've certainly ordered the book, and I want to do that. Scott, when you're reading the book, did he mention the fact that he was involved with long-term capital management? Because I understand that that's what he was the attorney for them, back in the late 90s when John Merriweather was running it. Do you remember that part of the book?
I don't remember it. He has a lot of ties to people in the financial industry, plus government associations and all that. I don't remember that. I don't remember that specific part of it.
Okay, not a problem. But I agree with you. I think it's a must-read because it's different than what most people are talking about, and he's certainly he has a tremendous CV. I mean, he really got a lot of credentials, so you ought to listen to a guy like that.
This guy, he's a kind of an interesting kind of guy. It's a must-read, absolute must-read.
The only reason I wanted to read it because he's the only person that thinks like I do that there's a chance it could go down. So we'll have to wait and see.
There are a lot of guys. The thing is, he's a very well-educated guy, and he's bringing in things. He's connected. He knows people. He travels the world. He's one of those guys that knows people who know what's going on. And so he brings a depth to it. I mean, 90% of the people who hear SDRs don't know what they are and what the intention is, and they don't understand how it's not connected to debt like the dollar is. I know your show's going off, but I appreciate the call. Thanks, Larry.
Hey, thanks a lot, Scott. Always love having you on, buddy. Hey, we got the Dow down a little bit, and gold is down $17.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
You're watching Tiger TV.